Hello, NINZA family. It's been a while since we last connected. Hope you're doing well and still going strong on your trading journey. Today, we're excited to bring you a topic that we believe you'll enjoy: supply and demand in trading. There are many ways to identify supply-demand zones, but this time we'll show you a fresh and rarely seen approach, something you likely haven't encountered in your trading before. But first, let us be clear about one thing. In trading, even when we work with the same concept like supply and demand, there are countless ways to interpret and apply it. You might identify supply-demand zones based on imbalance, price action, volume, or power shifts. That's why we continuously create new indicators with completely different signal detection mechanisms, tailored to serve the diverse needs of different traders. If you already have supply-demand tools and are satisfied with them, that's perfectly fine. We fully respect your choices and are always here to support you with any product-related questions or needs. Let's get started. Most of you are probably familiar with volume, and that's exactly the core foundation behind the development of VoluTank Army. More specifically, we combine price action with volume analysis to identify high-probability supply and demand zones. Volume is often overlooked when traders analyze supply and demand, but it's actually a critical factor. By reading volume correctly, we can assess whether a supply or demand zone is truly strong or just weak noise, helping us make smarter trading decisions. Before we go any further, let me briefly explain what a power shift is. A power shift refers to the transfer of control between buyers and sellers, clearly reflected through price action and volume behavior. This shift often appears right before major market reversals, signaling that the balance of supply and demand is starting to change. You can better understand power shift through the following example. Here, we observe a clearly defined downtrend in price action. However, right after a strong bearish candle, the price unexpectedly reverses direction instead of continuing lower and then surges upward. This moment marks a clear power shift, when sellers appear to be fully in control, but suddenly lose their grip right after one powerful move. It's a strong sign that market momentum is shifting, often leading to a major reversal. Likewise, when price is rallying aggressively, but then suddenly reverses with a sharp drop, it indicates that strong selling pressure has just entered the market. This is a classic sign that buyers are losing strength, while sellers are stepping in to take control, marking the beginning or confirmation of a power shift. Power shifts occur frequently in the market across nearly every time frame. But the real question isn't whether they happen, it's how can we identify the most reliable and powerful power shifts? This is the critical foundation for pinpointing high-value supply and demand zones, ones you can actually trade from with confidence, not just guesswork. So now, let's move on to the most important part: the supply and demand detection mechanism of VoluTank Army, where we combine price action, volume, and power shift in a fully automated, logical, and highly accurate way. To increase the reliability of a power shift, we incorporate the volume factor into our analysis. For example, we first observe a strong upward move, followed by a sudden reversal, which forms a clear swing high. Here's the key: we don't just rely on price action. We also use volume as a confirmation tool. Right next to the candle that forms the swing high, we notice a very telling sign. There's a weak bullish candle with low volume, failing to break above the volume moving average. A clear sign that buying momentum is fading. Immediately after that, we see a strong, bearish candle accompanied by significantly high volume far above the recent average volume. This is a textbook confirmation of a power shift where sellers begin to take over, overpowering the previously weakening buying pressure. At this point, after the power shift has been confirmed, a supply zone is formed right at the swing high area. Sell signals will be detected right at this supply zone. There are several exciting details about how these signals are generated, but we'll dive into that in the next section. On the flip side, when a demand zone is identified, you'll often notice this kind of scenario. Price is in a strong downward move, but then suddenly reverses to the upside, forming a clear swing low. However, what's notable in this case is that it plays out differently than the previous example. Right next to the swing low formation, we see a bearish candle with high volume exceeding the average logically. Price should have continued dropping. But instead, something unexpected happens. Price reverses upward sharply, driven by a strong bullish candle with equally high volume. This clearly signals sellers failed despite their high volume. Buyers suddenly stepped in with aggressive strength, pushing price back up. This marks a highly reliable power shift from sellers to buyers. Then, a demand zone will be formed right at the previous swing low area. A buy signal will be considered when price returns to this demand zone and begins to show a clear reaction indicating a potential reversal. Next, let's move on to the information presented within the supply and demand zones. You may have noticed the numbers displayed within the supply and demand zones on the indicator. These numbers represent the actual trading volume within those zones. So, how are these numbers determined? As I mentioned earlier about the supply-demand zone formation logic, each zone is defined based on two key candles. The candle that forms the swing point, swing high or swing low, and the candle immediately before it. The indicator will aggregate and analyze the volume from both candles to calculate the buy and sell volume within the supply or demand zone. Here's a concrete example. In a demand zone, we have a bullish candle that forms the swing low with a volume of 318. Right before it, there's a bearish candle with a volume of 329. The indicator will sum the volume of both candles to calculate the total volume of the demand zone. In this case, the total volume is 647. After identifying that the total volume is 647, the indicator proceeds to analyze the buy-sell volume ratio within the demand zone. Specifically, buy volume 308 or 47.6%. Sell volume 339 or 52.4%. This suggests that sellers appeared to be in control within the zone, even though price had already started to reverse upward. This likely means that a large number of sell market orders were aggressively executed into the zone, but they were completely absorbed by resting buy limit orders sitting just below. And here's the key point. When a sell market order matches a buy limit order, the trade is recorded as sell volume, not buy. So although sell volume appears higher, the reality is that buyers were absorbing everything, effectively exhausting the selling pressure, which allowed price to reverse upward from the demand zone. This is a classic sign of strong absorption combined with a power shift, a powerful confirmation for reversal setups. Similar to the demand zone analysis, we apply the same volume calculation logic to the supply zone. In this case, the green candle appears first with a volume of 62, followed by the red candle which forms the swing high with a volume of 505. The indicator adds the volume of both candles to determine the total volume of the supply zone, which in this case is 567. At this point, the indicator performs a detailed breakdown of buy and sell volume within the newly defined supply zone. The results are buy volume, 258, accounting for 45.5%. Sell volume, 309, accounting for 54.5%. This ratio indicates that sellers are in control within the zone, with sell volume clearly outweighing buy volume. However, it's important to understand that this is supplementary data provided by the indicator designed to give traders additional context, not to act as the sole decision-making factor. In real-world trading, we often see supply zones triggering strong price rejections even when buy volume exceeds sell volume. Likewise, we sometimes observe demand zones where sell volume dominates, yet price reverses sharply to the upside. So why do these counterintuitive reactions happen? Here's why. Volume shows us executed orders, but does not fully reveal the intentions of institutional players. A high buy volume inside a supply zone might actually be a bull trap, designed to lure in buyers before dumping price. Conversely, high sell volume in a demand zone may represent the final wave of selling absorbed entirely by strong buyers, indicating absorption or capitulation. This is why volume should be treated as a key supporting factor, but must be used in conjunction with price action, market structure, and contextual analysis to make informed trading decisions. We'll walk you through how to make sense of these insights in a practical way by applying them to real-time trading scenarios. We'll show you how to combine volume breakdowns, power shifts, and price action in actual charts after to validate supply-demand zones, filter out noise, and make more confident entries based on what's really happening behind the scenes. To wrap up, here's a summary of how VoluTank Army forms supply and demand zones. 1. It starts by monitoring price movement to identify areas with potential for reversal. 2. Then it detects swing points, both swing highs and swing lows where market control often shifts. 3. It looks for power shift signals at these swing points, indicating a change in market dominance, and analyzes the volume of the two key candles to measure the actual strength inside the zone. 4. Once all conditions are met, the indicator automatically plots the supply or demand zone on the chart, giving traders clear visual cues for their decisions. Up next, now that we've clearly understood how the supply and demand zones are formed, we'll move on to the most exciting part, the trade signals generated by the indicator. The indicator provides two types of trading signals, and the first one also, the primary signal type, is reversal signal. This signal is triggered when price touches a predefined supply or demand zone, and a clear reaction occurs at that zone. Once these conditions are met, the indicator will automatically scan for a valid reversal signal and plot a trade suggestion directly on the chart. What makes this reversal signal unique? It uses advanced algorithms to detect only candles with strong reactions at the zone. The signal is triggered only when real buying or selling pressure is confirmed. It helps filter out weak or fake setups. The second type of signal provided by VoluTank Army is break signal, ideal for traders who follow breakout strategies or use pyramiding techniques. You can enable this signal under the alert settings, using the condition breakout. The logic is simple yet effective. When a strong bearish candle breaks below and closes beneath a demand zone, the indicator will trigger a breakdown signal. The break signal is a critical signal for traders who trade downward momentum and seek to confirm a complete failure of a demand zone. Specifically, when price revisits a demand zone but fails to show a strong bullish reaction and is then violently broken by a bearish candle that closes below the zone, the breakdown signal is triggered. This implies that buyers within the demand zone have lost control. Selling pressure has overwhelmed the zone, breaking through key support. Why the breakdown signal matters? It flips the demand zone from potential support into resistance. It warns that buy setups at this level are no longer valid. It opens the door for trend continuation trades to the downside, making it ideal for breakout, pyramiding, or momentum-based strategies. Traders may strengthen this signal by combining it with abnormally high breakout volume, a demand zone that has been tested multiple times, additional confirmation from momentum indicators or volume spikes. Conversely, when price breaks above and closes above a supply zone, a breakup signal is triggered, signaling that buyers have taken control and the supply zone is no longer effective. The break signal can be applied in various real-world trading scenarios. Here's a practical example. Let's say you identify a previously formed supply zone. Later, price revisits that zone. But instead of reacting downward, it forms a series of large, bullish candles with strong bodies, a clear sign that buyers are in control. In this case, you can anticipate that the supply zone is likely to break. Enable the break signal to monitor the situation. In a breakup scenario like the one described, the candle that breaks the supply zone is typically a large, bullish candle with a strong body that closes clearly above the zone. This is when the break signal is triggered, and you can enter a buy trade immediately after the breakout is confirmed. However, it's important to remember, breakout trading is a form of chasing price, meaning you're entering after momentum has already begun. This comes with added risk. Price may reverse suddenly. You could get caught in a fake breakout if there's no solid confirmation. So when trading break setups, manage your risk tightly. Place a proper stop. Focus on breakouts with decisive breakout candles. Target can be set at the next supply zone above, where a potential reaction or pullback may occur. Continuing the sequence, you'll see that price forms another supply zone, and when it returns to this zone, it prints a large bearish candle with a strong body indicating a very strong reaction at the level. This is a clear reversal signal, and it's a good opportunity to enter a sell trade at this point. As price starts to move down, it approaches a previously formed demand zone. However, this situation plays out similarly to the earlier breakup scenario, but in reverse. Price touches the demand zone, but shows no bullish reaction. Instead, it forms a series of strong bearish candles, eventually breaking through the demand zone entirely. A breakdown signal is then triggered, providing you with a chance to pyramid into a second sell position, taking advantage of the momentum continuation. That said, to manage risk effectively, tighten your stop loss once price starts moving in your favor. This protects your open position while reducing risk if the market suddenly reverses. This is a powerful pyramiding strategy when reversal and break signals align, helping you maximize profits while maintaining disciplined risk management. There's another special option inside the signal parameters of the VoluTank Army indicator, and that is signal volume condition. This feature allows you to control whether the indicator uses buy-sell volume to qualify trade signals within supply-demand zones. When this option is unchecked, the indicator will no longer care whether total buy volume is greater than sell volume or vice versa. In other words, it completely ignores the comparison of buy versus sell volume within the zone. Instead, it will focus entirely on price behavior and reactions at the zone. As long as a reversal or break signal meets the required candle and zone conditions, the signal will be triggered, regardless of which side buy-sell had more volume. This option is ideal for traders who want to increase signal frequency and expand trade opportunities, traders who prefer to evaluate volume manually or use their own interpretation, situations where market volume does not clearly reflect actual buying-selling pressure. On the other hand, when the signal volume condition option is enabled, default on, the indicator will only suggest trade signals at supply-to demand zones where there is a clear between buy and sell volume. Specifically, at a supply zone, a sell signal is triggered only if sell volume exceeds buy volume. At a demand zone, a buy signal is triggered only if buy volume exceeds sell volume. By offering the ability to turn this condition on or off, traders can flexibly adjust their approach. For higher precision, keep volume condition enabled. For broader opportunity, disable it to increase signal frequency. Now let's take a closer look at why some demand zones still cause strong bullish reversals, even when sell volume is greater than buy volume. To understand this, we need to go beyond surface level volume data and look at it from a true supply-demand perspective. Imagine a downtrend unfolding. During this move, aggressive sellers, sell market orders, are pushing price lower until they hit a zone where a large stack of buy limit orders is waiting. Those aggressive sell orders get absorbed entirely by passive buyers. And although the system records it as sell volume, what's really happening is a silent shift in demand. Then something critical happens. Price stops dropping. Selling pressure hits its final threshold. This demand zone becomes a key psychological level because it marks the lowest price at which sellers were still willing to unload. They concentrated all their efforts at this level, refusing to sell lower. But they failed. The market didn't break. Supply dried up. Price bounced sharply with just a small push from buyers. So when price returns to this demand zone later, it's no longer just a technical level. It's a psychological memory of seller failure. That's why price often reacts strongly and moves up again, even though sell volume was dominant the first time. Similarly, as price rises, buyers push higher but hit a wall of sell limit orders. Buy market orders get absorbed. System shows buy volume, but supply is re-entering. Then, Price stalls. Demand dries up. Price reverses. The supply zone becomes a psychological ceiling where buyers previously failed. Price often drops again when revisiting this zone. With that, I've just answered one of the most frequently asked questions traders have about how VoluTank Army interprets volume within supply-demand zones. Now, before we move into the trading strategy section powered by VoluTank Army, let me first share a few key setting recommendations of this indicator. First, here are the settings I recommend for trading on 1-minute charts and 100-tick charts. To ensure VoluTank Army functions properly and accurately reflects real-time buy-sell volume, you must enable tick replay on your chart. Now, let's take a live look at how VoluTank Army signals appear directly on the chart. We know that many traders are eager to see how the signals unfold in real time, especially when they appear in sequence, following market flow. To meet that demand, we're showcasing the full signal activity right here in the webinar, so you can clearly see how the indicator performs under real market conditions. Let's start with the 1-minute chart. Next up is the setting on the 100-tick chart, and personally, this is one of my favorite chart types. Why? Because it completely removes the time factor and focuses purely on market movement and true price action. Now, let's see how the signals appear on the 100-tick chart and how it compares to the 1-minute chart we saw earlier. Don't forget to share your thoughts in the comments below. We'd love to hear your feedback. Renko charts are also a popular choice among traders looking to filter out market noise and focus on pure price action. And yes, you can rest assured, VoluTank Army works smoothly on Renko charts too. Below is the recommended setting specifically for Renko, along with sample signals on the chart so you can see how it plays out. We also provide a comprehensive manual with the indicator so you can easily understand the purpose of each parameter. If you need further assistance, feel free to reach out to our support team via email. support@ninza.co. Next, let's move into one of the most important sections: how to trade effectively with VoluTank Army. In this part, we'll walk you through real trades we've personally executed, using a combination of the indicator's signals and our own trading experience. These are genuine trades, not simulations. So you can see exactly how VoluTank Army performs in live market conditions and how to use it for real decision-making. And here's a quick teaser. Right after this section, I'll share our strategy that combines VoluTank Army with the Market Profile Daily Indicator. Easily one of the most requested topics from traders over the past week. Stay tuned, you won't want to miss this. Let's first focus on the supply zone below. This is an area where buy volume significantly exceeded sell volume, indicating strong absorption by buyers. Meanwhile, this demand zone was identified through a clear power shift, where sudden and aggressive buying pressure pushed the price sharply higher. As soon as the buy signal appeared at the demand zone, I used Captain Optimus Strong to enter the trade faster and more decisively. The stop loss is placed just below the demand zone, since a break of this zone often signals a high probability of trend reversal. The target is placed at the opposing supply zone. And as always, here's a crucial reminder: protect your profits at all times. Once the price moved in my favor, I trailed the stop loss higher to lock in partial profits, even if the price doesn't reach the final target. A sell signal then appeared, but since I was still holding the previous trade, I chose not to enter another position. That said, this supply zone has dominant buy volume over sell volume, so we should limit sell entries in such areas. Not that they are completely off limits, but they require extra caution due to potential absorption and lower reliability of the signal. At this point, when the price broke through the zone, I entered another buy position because I observed that buy volume at this demand zone was significantly higher than sell volume. This kind of breakout offers a great opportunity for a buy entry, as breaking through the resistance zone often triggers a strong bullish momentum. The key advantage of these breakout signals is that price tends to move swiftly and decisively right after the breakout, allowing traders to capitalize on strong market momentum. As always, I trail my stop to protect profits. No tool can protect your gains better than you can. So make sure to manage your risk wisely and stay actively engaged with the market. Right after closing the winning buy trade, I immediately reversed into a sell position. However, the price kept reacting at the supply zone, and given the strong prior bullish move, I decided to close the sell trade at break-even and wait for a clearer setup. Next, a demand zone appeared at this point. And as you know, demand zones are typically identified through power shifts, which signal a change in the supply-demand balance. At this stage, I began waiting for a buy signal. Indeed, the power shift occurred, and although price reacted at the previous supply zone, it failed to drop decisively and instead started forming clear bullish signs. All of this points to a high probability scenario of upward movement. After entering this buy trade, the price broke through two supply zones above and hit the target as expected. This proves that by combining real trading experience with the support of a well-designed indicator, we can achieve consistent and profitable trading. With just a few well-analyzed trades, we've already seen solid results. And let us emphasize once again, this was done entirely in real time, with no playback or pre-recorded setups. Next, the market formed two closely stacked supply zones, but the underlying demand zone showed significantly strong buy volume. When the price broke through the supply area decisively without any sell signals, I immediately entered a buy position. I then trailed my stop to protect profits, and the price surged strongly after the breakout. With the help of the VoluTank Army indicator, you can trade more effectively and make more accurate trading decisions in real market conditions. And here is the trade performance. With just 5 trades, we achieved over $1,000 in profit and an impressive 80% win rate. All from real-time trading, no playback, no simulation. Next, I took a sell trade which unfortunately ended in a loss. That said, the loss was minimal and didn't affect the overall profits from earlier trades. I know many traders might feel frustrated in situations like this, and that's completely understandable. But don't worry, this is a normal part of trading. What matters most is keeping your risk exposure low so you can protect the profits you've already made. Next, I'll take a few more trades using NINZA Renko so you can continue following along. Even though I've already hit my daily profit target, due to some technical issues, previous trades were not recorded properly, so I hope you understand. At the moment, my buy trade on NINZA Renko is already protected, thanks to timely stop adjustment to lock in profit safely. Next, we can clearly see that this demand zone shows dominant buy volume over sell volume, which gives us a valid reason to wait for a buy opportunity here. As expected, the buy trade was taken and was once again safely protected by trailing the stop at the right time. To wrap things up, I want to leave you with this key message. Always protect your profits, no matter the situation, because no tool can do it better than you. And now, let's dive into the section many traders have been waiting for. Combining VoluTank Army with the Market Profile Daily Indicator. Market Profile Daily is a special bonus tool we gifted to traders during the early access period. In this section, I'll share with you several real-world ways to combine VoluTank Army with Market Profile Daily. I won't go into too much detail about the components or features of Market Profile Daily, because I know what you really want is how to combine it effectively with VoluTank Army. The first thing you should focus on is the value area, the core price zone generated by Market Profile Daily for each session. This zone is defined by value area high batch, value area low val. It represents the price range where most of the trading volume occurred and where the market collectively saw fair value for the day. At this point, you'll notice that price initially breaks out of the value area, pulls back into it, and then breaks out again. Areas outside the value area are typically low volume zones, meaning there's no significant volume wall to slow price down. When price enters these regions, it tends to move quickly and cut through nearby structures, as there's simply not enough volume to act as resistance. That's why I tend to prioritize break signals from VoluTank Army when price is outside the value area, because the likelihood of price sliding through thin volume areas is much higher. In this case, price broke through a demand zone sitting just outside the value area, and I entered a sell trade right at the break because the volume wall was very weak at that level. Price moved through the zone almost effortlessly. This is classic behavior in thin liquidity environments. I didn't activate the break signal on the chart to reduce visual clutter, but if you want to track these zones more closely, you can enable that option in the indicator's parameters. In this case, the supply zone is located entirely inside the value area, which means it sits in a region of dense liquidity, where the market previously traded heavy volume. In areas with thick volume profiles, price tends to move slower, react more, and struggles to break through immediately. That's because there are a large number of resting orders at those price levels. It takes a substantial amount of volume to absorb the order wall within that zone. Without enough momentum, price often stalls or gets rejected. This is why zones inside the value area have a much higher chance of producing reactions compared to zones in low volume areas. So instead of looking for a breakout trade, it's smarter to wait for a reversal signal from VoluTank Army, ensuring better timing and better alignment with supply-demand dynamics. At this point, you can see that price is breaking out of the value area. In this case, we avoid taking reversal trades. At this point, as price continues to move, you'll notice that the value area has shifted as well. Now, a new supply zone is positioned inside the value area, meaning it's located in a high liquidity zone with a strong volume wall. In this case, the conditions for a reversal trade are met, and we can take a sell entry at this supply zone as long as there's a confirmation signal from VoluTank Army. And that wraps up how we use VoluTank Army in combination with Market Profile Daily in real-world trading. I truly hope this breakdown proves helpful, especially if you're looking to bring more precision and structure to your trading decisions. As always, if you have your own creative ways to combine these tools, we'd love to hear from you. We genuinely value your insights, and we're always excited to learn, exchange, and grow together with the trading community. Now let's dive into one of the most exciting combinations. VoluTank Army Plus Super Jump Boot 2 top performing indicators recently. But what happens when you combine them? As usual, I won't go over all the features of Super Jump Boot again. I've already shared a full breakdown previously on our official YouTube channel. So if you missed it, feel free to check it out to fully understand how it works. Now let's go straight to what matters most. How to combine these two powerful tools in real trading to boost your confidence and improve signal accuracy. Focus on the candle color from Super Jump Boot. When the candle is painted pink, it indicates that selling pressure is dropping sharply. In this case, you should prioritize sell entries from VoluTank Army over buy setups. Applying this helps you trade in line with momentum and avoid going against the flow. On the other hand, When the super jump boot candle turns green, it signals that bullish momentum is clearly in control. At this point, you should focus on BI signals from VoluTank Army rating in the direction of momentum. Not only helps you stay aligned with the trend, on the other hand, when the super jump boot candle turns green, it signals that bullish momentum is clearly in control. At this point, you should focus on BI signals from VoluTank Army rating in the direction of momentum. Not only helps you stay aligned with the trend, just like before, in this next setup, we once again observe multiple overlap zones, where a demand zone identified by VoluTank Army aligns perfectly with a support zone provided by Super Jump Boot. And right at these overlap areas, VoluTank Army issues a BI signal. This is a clear and high probability entry thanks to the convergence of three key elements. Cross-confirmation between two independent tools, which strengthens confidence. Price shows an immediate reaction at the overlap zone, confirming it as a valid support. Momentum remains bullish, supported by green candles on Super Jump Boot and a continuing bullish price structure. When a signal is backed by technical structure, zone alignment, and momentum, it becomes a well-rounded setup that traders should prioritize, especially in fast-moving markets. And with this combination, we successfully avoided a false signal, where VoluTank Army issued a trade suggestion, but price wasn't aligned with any strong market. Now let's take a look at how we integrate these two indicators into Captain Optimus Strong for executing trades. If we rely solely on strict signal alignment, signals will be limited and infrequent. So I use two types of entry logic. One, automated signal, auto mode, based on buy-sell signal from VoluTank Army, plus aligned momentum from Super Jump Boot. This signal logic is fully built into Captain Optimus Strong and will trigger automatic entries when both conditions are met. 2. Manual signal, discretionary mode. For this mode, I enable volume condition in VoluTank Army, meaning only buy if buy volume bigger. Sell volume within the demand zone. Only sell if sell volume bigger. Buy volume within the supply zone. By combining both signal types, I gain the flexibility to balance automation and manual control depending on the trade context. First, with the setup combining VoluTank Army and Super Jump Boot inside Captain Optimus Strong, the system successfully detected a qualifying signal and executed the sell trade automatically. Next, the system detects another valid buy signal and automatically enters the trade for us. In this strategy, stop loss and take profit are not based on fixed distances. Instead, we leverage key swing points or nearby supply-demand zones as reference points for managing the trade. Stop loss, typically placed below the most recent swing low for a buy or beneath the closest demand zone. Target can be set at the next swing high or near the upper supply zone. This approach ensures your trades are aligned with actual market structure rather than arbitrary numbers, resulting in higher accuracy and tighter risk control. Next, 2 consecutive buy signals from VoluTank Army appear, both occurring within a demand zone where total buy volume exceeds sell volume, matching the exact criteria we defined using the volume condition setting. This combination between auto and manual significantly expands your number of trading opportunities throughout the day, while still maintaining tight control, strong filtering, and disciplined risk management. Next, we'll continue reviewing the demo trade executions. You'll clearly see when the system executes automated entries. When we manually intervene with purpose, pay close attention to each example. This is the best way to understand how the strategy works in real-time trading. Next, let's explore another combination on the Renko chart. And this time, I'll be using only Super Jump Boot inside Captain Optimus Strong. Here's how the logic works. First, we wait for a sell signal from VoluTank Army at a supply zone. But we don't take the trade immediately. We only enter if a sell signal from Super Jump Boot appears shortly after. This gives us two powerful layers of confirmation. The supply zone from VoluTank Army indicates real distribution pressure in that area. The sell signal from Super Jump Boot becomes more reliable, as it's backed by a known resistance zone. In this case, price breaks through the support zone created by Super Jump Boot, and just above that support, we also see a demand zone that previously represented a power shift reversal. On top of that, a sell signal from Super Jump Boot appears right after. With all three elements lining up, support break, failed demand zone above, sell signal confirmation from Super Jump Boot. We can enter the sell trade with greater confidence thanks to solid confirmation from zone, structure, and momentum. This is a new and interesting combination we've recently discovered, and I truly hope you'll find it helpful in your own trading as well. And just like that, we've come to the end of our webinar, where we've shared everything about the indicator, from detailed features, trading methods, suggested settings for different chart types, to real-world strategy combinations. If you're still with us at this point, we truly appreciate you. But beyond that, we also want to extend our sincere thanks to everyone who joined us, even if just for a few minutes or if they had to leave early. Grateful to all, but especially grateful to those of you who stayed until the end. To show our appreciation, we're offering a set of exclusive deals, along with a completely free indicator as a thank you gift for your time. Here are today's top deals. VoluTank Army $309.96 for those who love reading supply, demand, and the market's mood swings. Super Jump Boot $396 when momentum is strong enough that you don't need coffee to stay awake. Combo VoluTank Army Plus Super Jump Boot is $646. For traders who hate watching the market move without them, VoluTank Army Plus Market Profile Daily $496. For those who missed the early access train but still want to catch the ride, Captain Optimus Strong $800 voucher $796, the all-in-one beast. Once you have this, everything else feels like decoration. Buy one, get the full combo, and $800 in your pocket to spend however you like. No need to rush, but maybe don't wait until tomorrow, because market emotions and trader motivation don't tend to stick around for long. You've made it through the entire webinar. Now it's time to choose your weapon of choice. We'll still be here, and we'll be thrilled to see your name on the list of those who took action at the right time.